seen my videos regularly, you have seen my previous video where I have concluded with sum number 20 of DK Gwell, and as I promised to you, I'll come up with sum number 22. So in this video, I'll talk about sum number 22. First, let us read the question and see what does this question ask us to prepare. Now, let us read question number 22. The question says A, B, and C are in partnership sharing profits in the ratio of 3:2:1. On 28 February 2017, C retires and the balance sheet is given on that date. The liability side shows creditors 1,20,000, outstanding expenses 10,000, profit and loss account 1,50,000. The capital of the three partners A, B, and C has 5 lakh, 3 lakh, and 2 lakh respectively. So total becomes 10 lakh, and the total of the liability side becomes 12,80,000. Let us move on to the asset side of the balance sheet, where we have bank 25,000, debtors 1,65,000, stock 2,50,000, investment 3 lakh, fixed assets 5,40,000. Total is 12,80,000. The following were agreed upon. The goodwill of the firm is valued at 1,50,000. C sells his share of goodwill to A and B in the ratio of 4:1. So in this case, we need not calculate the sacrificing ratio because it is very clearly stated how has C, the retiring partner, sold his share to the continuing partners A and B. Now, next one, stock is revalued at 3 lakh, debtors are revalued at 1,50,000. Very important. You can see over here the value of stock from 3 lakh goes from 2,50,000 goes to 3 lakh, so it is an increase of 50,000, and debtors there is a decrease of 15,000. Outstanding expenses are brought down to 3,000. It is not brought down by, it is brought down to 3,000. From 10,000, it is brought down to 3,000, so therefore there is a decrease of 7,000. Investment are sold at a loss of 10%, so you can see from 3 lakh, if you calculate 10%, that is 30,000. So investment are sold at 2,70,000. This will be used to pay off C, because the next thing which is said that C is paid in full. Prepare revaluation account, capital account, and balance sheet. So in this question, we are asked to prepare the revaluation account, capital account, and the balance sheet of the firm. So let's get started and see how we do the sum. After reading this question, we have come to know that in this question we are asked to prepare revaluation account, capital account, and the balance sheet of the remaining partners. In this case, you can see there were three partners A, B, and C, and who had a ratio of 3:2, and you can see that C has retired and he has sold his share in the ratio of 4:1. So we don't have to calculate the gaining ratio at all over here because the gaining ratio is given, that is 4:1. The next thing which has been given to us is the goodwill of the firm, which is valued at 1,50,000. If the goodwill of the firm is 1,50,000, the C's share, who is retiring, will be 1,50,000 for 1/6. So we will get 25,000, and if we actually distribute 25,000 in the ratio of the share as C had sold it 4:1, A will have 20,000 and B will have 5,000. So we can pass a journal entry if you want to, and that is very important. We should. I'm not writing the journal entry, I'm telling it to you. If you want to write it down, you can write it down. The journal entry will be A's capital account debit 20,000, B's capital account debit 5,000, to C's capital 25,000. Why? Because C's share was 25,000 and that has been distributed in the gaining ratio, which is 4:1 among the gaining partners A and B. Now, taking that into consideration, we will now move on to the next step, which is the preparation of the revaluation account. If you read the question very carefully, the first piece of information which is given to us is the value of stock is moving up by 50,000. Is it clear? The value of stock is moving up by 50,000. Therefore, if the value of asset is increasing, we'll write that in the credit side, and we start with buy stock 50,000. The next piece of information given to us states that the value of debtors is basically going down by 15,000. If you remember, if you see, the value of debtors in the question is given to you as 1,65,000 and it is revalued to 1,50,000, so it is going down by 15,000. So we are writing down two debtors and the value 15,000. Now there are other two informations which are given. There is information about outstanding expenses. The value of outstanding expenses is basically decreasing by 7,000, and if the value of outstanding expenses is decreasing, it is a liability which is decreasing and it will go to the credit side of the revaluation account. So therefore, by outstanding expenses 7,000, it is decreasing. Please be very clear. Value of liability, if it decreases, it will go to the credit side of the revaluation account. And the value of investment has also gone down by 30,000. See it very carefully. The value of investment has also gone down by 30,000, and it will be shown in the debit side of the revaluation account. So we are writing over there to investment 30,000. So this concludes the four entries or four assets and liabilities which were revalued. After that, let us find out the result of the revaluation, which is a profit or a loss. It is very clearly seen it is a profit because the credit side is 57,000 and the total of the debit side is just 45,000. So therefore, there is a profit of 12,000. So you can see over here the total is 57,000. And now we have to share of profit, and we can see three partners A, B and C. Please see very carefully, the profit is 12,000 and it is distributed in the old profit sharing ratio. Always remember, in case of retirement or in case of admission, always the profit on revaluation will always be distributed among old partners in the old ratio, and over here the ratio is 3:2:1. Therefore, A will get 6,000, B will get 4,000 and C will get 2,000. With this, we have come to the end of the revaluation account. After the preparation of the revaluation account, we will now go to the preparation of the capital account, and after that we'll prepare the balance sheet of the firm in which one of the partners, that is C, has retired. After completing the revaluation account, now let us move on to the capital account. You know the balances given of the three partners A, B and C is 5 lakh, 3 lakh and 2 lakh, and there is one internal entry over here. Profit and loss account is given as 1,50,000, which will be distributed among partners in the ratio of 3:2:1. We have already done the treatment of goodwill. I have already told you how 25,000 has to be written, and then we have got over here the profit on revaluation. There are no other treatments which will be shown in the capital account. Let us get started with the capital account and let us find out what will be the balance and what will be the amount which will be paid to the retiring partner. So over here we'll start with by balance. See very carefully, I have omitted the date column. You should always do the date column. Date of retirement should be written over here by balance. If you remember, A has a balance of 5 lakh, B has a balance of 3 lakh and C has a balance of 2 lakh in the capital account. Next one is by profit and loss account. Please see very carefully in the question. The profit has been given as 1,50,000 in the liability side of the balance sheet, which means it is not distributed yet. It should be distributed among the three partners, 3:2:1 ratio. Therefore, the first partner will be getting 75,000, the second partner will be getting 50,000, and C, the retiring partner, will get 25,000. Is it very clear? And is 1,50,000 divided in the ratio of 3:2:1. Now, if you remember the treatment of goodwill, 25,000 in the ratio of 4:1. Why? Because C has sold his share in the ratio of 4:1. So, we'll do the entries for that by A's capital and by C's capital, by B's capital because C has retired, and the amount will be 20,000 and 5,000 respectively. The corresponding entry in the debit side will write over there to C's capital account, and in A's account we write 20,000 and in B's account we write 5,000. C has retired. Apart from these entries, there is one more entry which will be taken, and that is the profit on revaluation. You can see over here the profit on revaluation 6,000, 4,000, and 2,000. Therefore, by revaluation, you can also write profit transfer, and the value is 6,000, 4,000, and 2,000. So this completes the entries in the capital account. The next step is adding it, finding out the balance. Is it clear? So now let us see A. What is the total of A? 5 lakh plus 75,000 plus 6,000 gives you 5 lakh 81,000. The total of A is coming to 5 lakh 81,000. That for B, if you see, the total is coming to 3 lakh 50,000 plus 4,000 comes to 3 lakh 54,000. And that for C, the retiring partner, you add 2 lakh plus 25,000, 2 lakh 25,000 plus 25,000 again, that's 2 lakh 50,000 plus 2,000 is 2 lakh 52,000. Now over here, if you remember very carefully, 2,50,000 has been paid off. Okay, has been paid off by what? It has been paid off because if you remember, the investment has been sold off at a reduction of 30,000. 30,000 has been already been shown over here, and the cash which has been received from here has been used to pay off the retiring partner. Here the retiring partner is C. Okay, so let us see how much has been paid off. That is 2,52,000. So we write over there to bank and write 2,52,000. If you remember, till now we were keeping this amount as a loan in the balance sheet, but here it has been paid off to the retiring partner, 2,52,000, and I have already told you how we have got the money. Okay, now 5,81,000 is the total of the first partner. The second partner total is 3,54,000, and the third partner has been paid off. Please see very carefully the balance now. To balance, carried down, 5,81,000 minus 20 gives us 5,61,000. And over here 3,54,000 minus 5,000 gives us 3,49,000. So these two figures, 5,61,000 and 3,49,000, will be appearing in the balance sheet of the firm, which I'll just now prepare. Now let us come to the balance sheet of sum number 22 and conclude this sum. If you see very carefully, in this case the investment was sold at a loss of 10,000 and it was used to pay off the retiring partner C. Now in many students will not like to write the investment in the balance sheet as it is being sold off, but it is an advice to all of you that you should write the investment in the balance sheet and show the treatment what has happened. If you remember, it has been sold at a loss of 10%, so the 10% had actually gone to the revaluation account. If you remember, we had posted 30,000 in the debit side of the revaluation account, and the value of investment has been sold at 2,70,000. That would go to the bank account. So we'll start with the balance sheet. You can see the date of the balance sheet given at 28 February. That was the date of retirement of C. And we'll start off with the first item, bank, which is given in the question. And the bank balance was 25,000 given in the question. And with that, we'll add up 2,70,000 which we have received from the sale of investment, and we'll subtract the amount paid to the retiring partner, 2,52,000. So first treatment is bank. See very carefully. I'm opening a bracket, writing 25,000. With that, I'm writing 2,70,000. This is the amount which we have received by sale of investment, and 2,52,000, which is the amount which has been paid to see the retiring partner. This can be shown in the bracket, or it can be shown bank 25,000 add investment sold 27,000 less paid to see 2,52,000. Both are absolutely correct. You do whatever you feel. Okay, so over here the amount is 43,000. So after the bank, the next asset which is given in the balance sheet is debtors. And what has happened to debtors? The value of debtors has gone down by 15,000. So the value of debtors was given as 1,65,000 less decrease or provision for doubtful debt. I'm writing provision for doubtful debt as 15,000, and I'm writing over here 1,50,000. After this, the next treatment which we'll do over here, be very careful about the stock. Okay, stock. What is the value of stock given in the question? See very carefully. It is given as 2,50,000 and it has increased by 50,000. So stock 2,50,000. It is increased to 3 lakh. So add, increase 50,000. So outer column 3 lakh. Okay. After we have completed the bank, debtors, stock, now let us concentrate on the investment purpose. Okay. What was the investment? Please see very carefully. 3 lakh. It is sold at a loss of 10%. So let's decrease 30,000. You can also write less revaluation and less bank. This is very important because you have sold it off. Put a dash in the outer column. See over here, investment less decrease. Those who cannot read what I have written. Investment 3 lakh less decrease, 30,000 less bank, 2,70,000 less 2,70,000 has been posted over here. If you can see very carefully. Apart from that, we also have a fixed asset of 5,40,000 which does not have any adjustment. Okay, so we have fixed assets 5,40,000. Please see very carefully. There are 4 figures in the asset side of the balance sheet: 43,000, 1,50,000, 3 lakh, and 5,40,000. Now let us come to the liability side of the balance sheet. So we'll start with the capital account. And if you remember, the two partners A and B are continuing and C has retired. If you remember the capital account, we had got a balance in the capital account of A 5,61,000. And we had got a balance of B as 3,49,000. So this is the capital account of A and B, 5,61,000 and 3,49,000. If you add both, you get a figure of 9,10,000. Okay. Now see very carefully, C has been paid off. Generally, when C is not paid off, we write a C's loan over here. But in this question, C has been paid off, so we don't have to consider that. Now we have a creditors over here, the value of which is given as 1,20,000, and there is a outstanding expenses. And if you see, there is a treatment of outstanding expenses 10,000, and there was a decrease of 7,000. Okay, so 10,000 less decrease 7,000, outer column 3,000, and therefore we have 3 figures in the liability side of the balance sheet. Now let us add this and see how much we are having and see if the balance sheet tallies. So 9,20,000 plus 9,10,000 plus 1,20,000 plus 3,000. If you see very carefully, we get 10,33,000. Now let us see over there how much we are having. 43,000 plus 1,50,000 gives us 1,93,000. 1,93,000 plus 3 lakh gives us 4,93,000. 4,93,000 plus 5,40,000 gives us absolutely 10,33,000. Therefore, sum number 22 tallies at 10,33,000. And with this, we conclude with sum number 33. If you remember, this question had asked us to prepare 3 accounts: the revaluation account, the capital account, and the partners, and the balance sheet of the continuing partners. In this case, we did not have to calculate a gaining ratio because it was already given to us. Keep watching. I'll come up with more sums very soon.